Let's get to this data. It seems to have settled absolutely nothing about whether we go 25 or 50 tomorrow afternoon. What's your base case now?
So I would say that what we discussed here in the past is still valid, that the Fed is data dependent, not data point dependent. And so I hope when they sit in their deliberations today and tomorrow, they'll look at what we've seen in the economy over the last 3 months. I would say before the quiet period, we didn't have an indication that they wanted to start this cutting cycle with a big cut, but it seems like perhaps we don't have as good a sense of how the Fed is interpreting the labor market data as we should. And so I think into the decision, it's really essentially a coin flip, and I don't disagree with market expectations here. I do think that the Fed perhaps is looking at the fall in vacancy rates, at the recent uptick in the unemployment rate, and the labor market differential from the consumer side of the data, and saying, okay, the labor market is really slowing down, and perhaps we are a bit behind the curve, and we want to take some insurance cuts early in the cycle. So I think it's completely possible that we get a 50 basis point cut tomorrow. And I do think that the summary of economic projections is probably going to show that the dot plot has 100 basis point worth of cuts for the year as a whole. And I think if you consider how the market deals with uncertainty, perhaps from the FOMC's perspective, it makes communication easier. They start with 50 basis points, and then the market can expect at the November and December meeting a couple of 25 basis point cuts.